Great. So I think we've got a large size audience and probably we can kickstart the session. Thank you all for choosing to spend a good 1 hour of your weekend with us. We do hope that we're going to add a lot of value to you in your home buying journey and your general understanding of how the real estate industry is shaping up. Of course, the theme is about the future, what's going to happen in 2026, but a lot of what is going to happen in the future is based on what happened in the past and of course what kind of changes which are going to happen in the macro environment which will decide what's going to happen in the future, right? So again, this is a AMA session for those of you who are probably new to Propsoch and have we have not interacted before in our other webinars like horrors of home buying or any of the tear downs of projects. I think I'll give you a quick introduction about myself. I'm Ashish Acharya. I'm the founder of Propsoch. I have close to 18 years of experience in the real estate space, having worked with companies like Godrej Properties, where I led investments for South India and NCR markets. And I also worked as a director at Anarock. I was taking care of all their, high-profile transactions when it came to land deals and investments in real estate. So Propsoch was started with an idea to help home buyers leverage more data, more insights, more research, so that they can take more informed home buying decisions. Because honestly, most of the players in the market today are biased towards the sellers, whether it is the online websites, whether it is the brokers. Everyone's largely aligned with the seller and not so much with the buyer. Hence, during your own home buying experience, you might have come across a lot of situations where you saw the rosy picture, you saw amazing mock-up flats, you saw great brochures and walkthroughs, but there always was a feeling that how do I actually get to know what are the challenges of a project or what are the challenges of a particular market, right? So Propsoch basically solves for that. We are like an advisory platform where people can engage with our advisors and figure out what choices to make. Having said that, I'm just going to quickly set the agenda for this particular conversation, right? And I think, yeah, just give me 1 second, please. Yeah, so largely we are going to discuss macro trends. We are not going to be discussing specific projects or specific developers. If anyone has questions on specific projects or specific developers, you can just write it in the comment box with the project name or the developer name, and our team will get in touch with you post this conversation and help you understand that better. Right. Again, like I said, this is largely going to be data backed, but I would also love if there could be a healthy debate, during this webinar where you all participate because you have, it's not like, only we know about real estate. You have been in the market, you have seen things. We would love to hear your own experiences. Yeah. Okay. So we'd love to hear about your own experiences and what challenges you faced and what is your own projection of what's going to happen next year, right? So let's dive into. So to lead the conversation, maybe I'll show you some amount of data, right? And I think that could spark some thought and some interesting conversations around it. So just going to share my screen. Give me a second. Yeah, I hope my screen is visible. Great. So if it's not visible, then I'm happy to retry this. But if it is, can someone just give me a thumbs up? Okay, thanks. Okay, super. Great. So let's, in fact, I shared, a graph. Yeah, I shared this on the community just 10 minutes back and said that this is what we're going to discuss. So this graph basically tells you how the prices on a per square foot basis of super built up area have changed over the years, right? So if you see 15 years back in 2010, the price was around 3,000 rupees per square foot on an average. Now, again, there are projects which are at 18,000, 20,000. There are projects at 5,000 also, but we are only talking about averages here of homes sold in the primary market, which is sold by developers, right? So what used to be 3,000 rupees per square foot doubled to 6,000 only in 2021, right? It took a good 10 years for the average of the market to double. Okay. But what happened is from 2021, 22 onwards, the prices went up by another 50% on an average, right? Which is a pretty sharp increase. And a large part of this, was honestly between 23 and 25 itself. So now the question which everyone's asking is this a bubble? Is this trend really going to continue? Is it going to stagnate or is it going to crash? And if we buy now, would we be paying overpaying for a property? And or if we don't buy now, will we be missing the bus, right? I think the answer lies somewhere in between, and we are going to figure that out during this rest of the conversation. But yeah, Shantanu, absolutely. At a CAGR level, on an average market perspective, it is just modest. It is not a crazy return, but there are multiple levers which you have to consider when you are looking at real estate returns, right? One could be, are you taking leverage, which is, are you taking a home loan? And then you have to calculate the return on your equity invested versus overall property value. But that's for a different day. But you're right. On an average, the prices have gone up at a modest level, but there's a lot of nuances to how you can make money in real estate, right? So now, to understand why the prices have gone up like this, right? Post-COVID for sure, but there are other macro factors which are at play. And for that, you will have to understand what's happening on the demand, where the demand is getting generated from, right? So you look at these two graphs, they have a very similar pattern, right? But no, Abhishek, this is data for all the developers in market who are selling their inventory. It's not limited to grade A or grade B. Yeah. So you see this is office absorption, right? So what you're seeing here is how many million square feet of office space is being leased out every year. Okay, so and very interestingly, the residential sold in the market follows a very similar pattern to the office demand, right? So it clearly establishes that Bangalore real estate is largely driven by the commercial ITES demand in the space, right? So every time there's been a drop in commercial leasing, there has been a proportionate drop in the residential sales too. But one more very interesting factor for you to consider is that there is a particular ratio between office demand and residential demand, right? It ranges between 5 to 8 to 9x. So what that means is for every square foot of office space which is leased out, it generates a demand of 5 to, just say 10x, 5 to 10x demand on the residential side. Okay. Why does that happen? It's a very simple logic. Typically, all of you work in these large ITES campuses. Typically, from a developer's perspective, every employee is dedicated around 150 square feet of overall leasable space, right? What that means is not just your desk and your chair, but all your common areas, everything. When you total it and divide it by number of employees, it's typically in the range of 100 to 150 square feet. Now, if you look at the number of employees who are working in these companies, and then you multiply that by, how many of them would actually want to, everyone wants to live in a house for sure, but how many of them are renting, how many of them are buying is what is important, right? So if everyone was buying a house, the residential demand graph would have been, much, much higher. But a large part of people who also migrate to the city first rent out for the first 4-5 years, and then they decide to settle down in the city, then they go ahead and buy, right? So you need to always keep this in mind that every time there is an increase in office absorption, you're going to see 5x to 10x demand increase in the residential side also. And this is proved over the last 15 years, okay? Another interesting thing is the office demand in the market from 2010, where it was around 9 million square feet, has gone up to around 21 million square feet in 2025, right? Which is the all-time high which Bangalore has seen. This is largely driven by the onset of the GCCs, the expansion of large ITES campuses within the city, and new corridors opening up for office space, which make it more attractive, like North Bangalore, right? So the Bangalore micro market, the airport road itself has seen a lot of office space absorption. We'll get into each micro market wise office space absorption data in just the next couple of minutes. So this is the trend, and I want you to remember this because this is also going to be very instrumental in deciding what is going to happen in the future, right? So this is the residential units sold per year in thousands, right? So to make it simple, 32 means 32,000, 68 means 68,000 homes sold, right? And as you can see right here that, while the home sold has doubled over the last, 15 years, the prices have tripled, which I showed you in the previous graph, from 3,000 to 9,000 rupees, right? So the overall volume of money which has gone into residential real estate has gone up exponentially, right? Because it's a factor of both these increase in volume and increase in pricing, right? Now, during COVID, of course, there was a severe drop in the demand for residential units, but the pickup was even more dramatic, where it jumped from 24 to 53,000 homes in just 2 years, right? And and all of us today have the latest memory of this particular part of the graph, which is that steep increase in prices, where everyone's complaining that Bangalore is overpriced, it is not the market to buy real estate, and it's a huge bubble. That is largely because of this one particular graph which has happened. Similar experience happened, at this point also. And given the fact that I've been in the space for a long time, I remember that people spoke about a bubble at that time. People said, this is going to be, markets are going to crash. And funnily, it did crash, but for a very different reason, which was COVID, right? But in case this crash didn't happen, this graph probably would have trended more organically and still reached 68 at this point in time, right? This is again very interesting for you to understand that the prices have not tripled just because the volumes have tripled. The volumes have only doubled, but the prices have tripled because of the large amount of demand which is coming in from home buyers now. Okay, so now the question is, there must be a lot of supply, right? A lot of you must be thinking or reading articles where people say there's oversupply happening in the market and that's going to crash the prices and stuff like that. The reality is this, right? The supply has always been in a cat and mouse game with the demand, right? Sometimes it's been higher and sometimes it's been lower. So the supply is basically the blue line and the demand is the red line, right? So in the last in the last 1 year, you would have seen an increase in supply and new launches coming in the market, because developers are also very reactive, right? So when they saw this massive demand happening between 22 to 23, right, they started acquiring a lot of land parcels. And the approval process from acquisition of a land parcel to launch of a project is typically in the range of 9 to 12 months, right? So that supply has actually started hitting here, right? Meanwhile, what has happened on the demand, there has been a slight taper of demand, right? Because of the exact reason that people thought it is a bubble and, prices are too high. So there has been a saturation or stagnation with respect to demand at this point in time. So this gap is probably something which you might be hearing about, that there's a lot of oversupply happening in the market. But let me also prove to you why that is not true. It is because there might be supply, but is the supply happening in the micro market where you want to buy, or is the supply happening in very irrational locations where, there are projects which are coming up near Attibele, where, there are 30 acres, 40 acres, 50 acres, large communities. Now, that is also considered in this overall supply. But if you try to buy a house today closer to Outer Ring Road, Bengaluru, Marathalli, the supply is extremely less compared to the demand. So if you drew this graph to compare the supply and demand for each of these micro markets, you will see demand far outstripping supply in certain micro markets, and in certain speculative markets, you will see supply, outstripping the demand in a very big way, right? And that results in this kind of pricing. So while the 9,000 rupees is an average price, certain markets are at 15,000 plus today, and certain markets are in the range of 6,000 to 7,000 rupees per square foot. Again, this is an average. It covers plots, it covers apartments. So just take it with wide range in mind. It's not like you just go to a property and say, I know the average in the market is 9,000, so sell this to me at 9,000. That's not how this market would work, right? Now, this is another very interesting graph, because here we talk about the office space. We're going back to that original thesis that office space drives residential demand. But where is the new office space demand coming in, right? So of course, Outer Ring Road by far has been the leader for the longest period of time, right? And followed by East Bangalore, which was Whitefield in the blue line. But most interestingly, the North Bangalore, which is the yellow line, which was almost at nothing in 2010, has been going up, and there's been a sudden increase in the office space demand in the last 1.5 years in North Bangalore. Now, when I say demand, it doesn't mean the offices have opened up and people have started working there. What I mean is the number of pre-leases which have happened, where a company has gone to a developer and said, I want to take over this building, like what Amazon did with Satwa Horizon, right? The pre-lease agreement was signed more than a year back. Only now they're moving into that campus. So North Bangalore has seen a very, very steep climb. In fact, it's 2x in the last 1.5 years in terms of office demand, which is why you're hearing a lot of conversations about invest in North Bangalore. There's going to be a lot of demand. This is the reason, right? South Bangalore typically has been very, stable, not too much of supply coming in there. Very few companies, mostly expanding their existing campuses in that market, but not any crazy demand or anything happening there. And we have clubbed South. CBD is basically the center of the city, and any other peripheral markets into the green line, right? So I hope this graph is clear and tells you, how the office market demand is shaping up with respect to location, right? So now what's going to happen in 2026? So what is being projected by most of the, property consulting companies in the market, like ICMR, Anarock, JLL, Knight Frank, is the absorption which is going to happen in the market is going to be in the range of 15 to 16 million square feet, right? Just to remind you, 2025 was 21 million square feet. So there is a dip in terms of how much commercial office leasing might happen in 2026. But again, going back to the rule book, which I told you earlier that, the thumb rule, which I told you earlier, that for every square foot of commercial, you get at least 5 to 10x demand in the residential square footage space. So you can expect 16 million square feet of commercial to result in at least 80 million square feet of residential demand, right? And that is what is going to decide the future of residential real estate in Bangalore in 2026. So that brings my monologue to an end, and let's kind of open the floor for any questions that anyone might have, either about this presentation or about the market in general. Happy to take them. It would be good if you could just put your hand up by using the icon below and going ahead and asking your question. No questions? This was too theoretical? Okay, so Dilip, please go ahead and unmute yourself and ask the question.
Hey, my name is Dilip. Me and the wife have been trying to look for a 3-bedroom apartment for self-use, and this thing has been going on for the past, I'd say, 1.5 years.
Yeah.
Now, one of the difficulties that we have experienced is that we've gone back to the same builder or project multiple times. And especially with all of these bigger builders, the price of the property seems to be going up every 3 months, every 4 months. And it's not a moderate increase as well. I'll give you an example.
Yeah.
There's one project in Kanakpura Road that we went to, and we've been looking at this apartment literally for the past 1.5 years.
Okay.
It started at 1.76 crores. And earlier this year, it went to 1.80. And then in July, it was in July, August, it was 1.88.
Yeah.
And now, as of yesterday, it's 1.93. And one of the difficulties here is that it seems very difficult to understand what justifies this incredible rise in prices in properties. So that's one thing that I've been noticing.
Yeah.
The other thing is that people hardly seem to be wanting to negotiate even a lakh or 2 rupees of the proposed cost. So the attitude that I've been noticing is that this is the cost, this is the price. I can give you a 50,000 rupees discount, take it or leave it, right?
Yeah.
That's the attitude that I've been noticing.
Right.
And it's kind of funny to me because a lot of these projects, I've been visiting a lot of these projects, and the property that I have been inquiring has it remains unsold, right? Those
Hmm.
units that I'm looking at have not been sold in the past 1.5, 2 years.
Yeah.
Uh, but the cost just seems to be going up. Almost seems to be some kind of, a far better purpose rather than, sales, which seems to not be the agenda here. So I'm just wondering if other people are, noticing something like this, and, what's going on, because I'm not able to rationally explain what's going on in the market. I mean, with my
Yeah.
limited amount of exposure and intelligence in the real estate market, I just don't understand why I'm saying what I'm saying.
Yeah, yeah. So, Dilip, I think most of the people on this call will agree with you, and it's not an isolated case which happened with that particular project, but it's happened across the spectrum, right? Across markets, across developers. See, for developers, a lot of their land deals which they had struck or they had done joint ventures with landowners, right? They were done at certain pre-negotiated ratios or at certain assumptions on what the price would be, right? Now, when the prices have gone up by, 25, 30, 40%, and they've realized the cash flows much earlier, now they're in no crazy pressure to sell, okay? Because they've already kind of covered the base business plan which they had underwritten for acquiring that particular property, right? So developers have the opportunity now to hold on to certain prices, even if it affects their volume of sales, because in the beginning, they would have sold 30, 40, 50% of their inventory and covered their entire construction costs of the project. The good part is all these projects will get completed on time because there's a lot of cash flow with the developer. RERA is also a little strict, so developers can't just siphon off that money. But the bad part is that developers won't be in the mood to really negotiate and bring down the prices. Although in new launches, you will see developers coming out with interesting schemes, where they say 2080, 1090, or they might offer you, certain discounts. They might throw in a modular kitchen or something like that. But no developer worth his salt will bring down their base price, right? That won't happen in the market. I'm very, very sure of that, right? Because the demand is still organic. It is still end users who are buying. The investor ratio is probably 20 to 25% of the entire demand which is being generated. So when there's so much demand, developers typically tend to not budge on their base price. But if they want to move, say, 50 units at one go, they will roll out a scheme where they give you a better payment plan or a scheme or something like that. So, Dilip, I think we ran a webinar called To Buy or Not to Buy, largely for people who are sitting on the fence and who have been waiting for something to change in the market, and only to realize that, hey, even if the price didn't go up, the particular property which I wanted to buy got sold out in the last 1 year. Right. So now, even if you can afford that same property and there's no supply there, then you're forced to move to the next property, which might be another 2, 3, 4 kilometers down the road. Right. So our advice on that call was, if you're a genuine end user and you want to lock in, real estate, and you don't want to be moving out further and further away from the city, then don't overthink it, because there's no big crash going to happen. You might as well just buy and get that out of your system, and then you can focus on what you do, versus spending every weekend on running from one property to another or pushing a developer to give you a better deal, right? So I hope that clarifies, Dilip. Uh, Great. There are a few questions in the chat box, so I'm just going to answer them very quickly. Yeah, Abhishek Pruthi, is this 16 million new demand are also considered office shifting from one location to another? Abhishek, great question. This is net demand, right? This is taking into account offices which are just moving from one building to another, and taking into account where offices are being shut down and new offices are opening up. This is the net demand which we are talking about. Secondly, this is also largely driven by, like what I said earlier, the pre-leases or the RFPs which are floating in the market. Like RFPs, like a Google would put out an RFP calling for real estate developers to come and make bids for their 2 million square feet of requirement, right? So this data is based on that. 80 million square feet demand would be ready to move in. Yeah, same answer, Anurag. The 80 million square feet would not be necessarily ready to move in. It would be a combination of new launches under construction and ready to move in. I think ready to move in, while demand is very high for ready to move in, the supply is not there for that, right? So I think probably 20% of whatever is being sold is in the ready to move in category. Kiran's question about how about Southeast market like Sarjapur, do we see any demand in future? Yeah, so Sarjapur is largely fed by outer ring roads office space demand. Now, Sarjapur itself is getting a lot of commercial development on it, but more importantly, Sarjapur is seeing social infra development. It's getting malls, it's getting hospitals. Schools has always been the strength of Sarjapur Road with that whole international school belt between Vattur and Sarjapur. So when the social infra is improving, a metro line is announced, there is going to be sustained demand on Sarjapur Road. Although living on that road might be very difficult because of the kind of metro line construction ongoing, all these different projects being constructed. It might not be the best living experience which Whitefield offers today, right? Because most of the infra work is done, right? Most of the lands have been developed. Now all the development in Whitefield is largely happening towards Sai Baba Ashram Road or further down Saukya Road. So today, core Whitefield is a settled location where the traffic is predictable, the metro is running, so there is no and there is no another 10 million square feet of office space being built in core Whitefield. So you won't see that kind of change. But Sarjapur is going to be what Whitefield was probably 10-15 years back in terms of livability, right? So yeah, Akash, please go ahead and ask your question.
Hi, Ashish. Thanks for the insights regarding the thesis that you mentioned, right? Connecting office space demand to residential space demand. I
Yeah.
had one question around that.
Mhm.
So the key office spaces that I see would be coming up around are like North Bangalore, the Bangalore micro market that you told, and then there is some expansion happening towards Whitefield area,
Yeah.
right? So given that uh, it's in north and east sort of, so buying a home for self use around Budigere Cross, right, where there's not much new office space coming up, but it falls between these two
Absolutely
regions, right?
correct.
So what do you have any insights on that?
Yeah, yeah, sure. I think Budigere Cross is a very interesting location because one is it's got the highway connecting it to the city. It's one straight road, Old Madras Road, which cuts right till Indranagar and further down to MG Road. Of course, there are bottlenecks at KR Puram and Tin Factory, but the point is the road is there, right? Unlike a lot of
Mhm.
other locations where roads only don't exist, right? Or they're
Correct.
12-meter roads or 18-meter. This is a massive highway with, and it has been there for a while. Unfortunately, there's no real metro development or big announcement happening for metro connectivity to Hoskote. I think there have been speculations and rumors, but it's not really been formally announced, right?
Right.
The other good part, like what you rightly said, Budigere Cross is probably 30-40 minutes away from the airport and from the Bangalore KIDB 3,000-acre aerospace and hardware park. So it can serve that market also. People working in that market can choose to live in Budigere area. The other segment, of course, is the Whitefield side. As Sai Baba Ashram Road has been developing and prices there have now touched 14,000-15,000 rupees a square foot. You're going to see Old Madras Road becoming the choice for people looking for prices slightly lower than that, right? So I
Yep.
think it's going to be a very good residential catchment. It's got decent social infra. I think Brigade has a mall already there. So I think things will only improve in the long run. So it's definitely a decent place to put your money in, Akash.
Yep. Thanks, Ashish.
Sure. So I'll take some more questions which have been asked in the comments. Uh, Also would be great if you could show some trends in the evolution of average size of apartments over the years. Yeah, Anurag, I think that's a good point. Maybe we'll just do that analysis and share it with you on the community itself. But actually, the average size is yo-yo. Initially, the average sizes were much larger. Then developers got into this whole thing of ticket pricing. Like if they can write on a billboard that you'll get a 2 BHK for 70 lakhs, right? What can you squeeze? Developers don't want to squeeze the price per square foot, but they can squeeze the size of the unit, right? So you saw, in fact, that's what you saw in Bangalore, right? With all the big projects coming up there. The houses are very small. The carpet areas are 50 to 55% efficiency, right? So people saw the billboard, they said, oh, wow, I can get a 2 BHK at 40 lakhs also here. I can get a 3 BHK at 60 lakhs. This is my chance to invest in real estate. They went and invested, right? But today, as the projects are getting completed and people are looking at the finished product, there is a certain amount of disappointment because the rooms are smaller. It is extremely tight. You're going so far out, and then you're living in a tight, small house. Has become like a catch-22 situation for people who have already invested there, right? So, but post-COVID, the sizes of houses have again gone up because people realize that if you have to be locked up in your house, you need more space, you need larger living space, larger bedrooms, and developers got a pulse of that, and they started making larger and larger houses. So that's the trend that we have seen. But we can share the numbers with you on the community after this, right? Ramya has asked a question: what advice would you give to beginners who want to start investing in commercial real estate? Wow, okay. I think my presentation has had a very tangential impact, which is commercial real estate looks attractive. Actually, it is an attractive asset class. Typical rental yields that people make in commercial real estate is in the range of 6 to 7%. Whereas in residential, the rental yields are in the range of 3.5 to 4.5%. The challenge with investing in commercial real estate is unlike buying a home or a residential property where you're the owner of that house. The UDS assigned to that house belongs to you, and you literally have the lock and key for that house. In commercial real estate, it's not like that. You can buy a fraction of a larger commercial space, right? Now, what happens in that is tomorrow you want to exit it. You have to figure out someone else who wants to buy commercial real estate space, and they're okay with being a fractional holder in a larger space, right? So it's not like there are different kinds of commercial real estate. You can go and buy a shop, you can buy a small office of your own and get access to it. But when in the bigger picture, when people now talk about investing in commercial real estate, they're talking about investing in these IT offices where the entire floor plate is being sold to, say, 100 people by a holding company, and you get either shares in that holding company or you get UDS in that that 1 lakh square foot space of commercial, right? So exit is a little more difficult. It's a little hazy. You get your dividends, you get your 6-7% kind of dividends, and but the question is, it's not only about entry price, it's not only about dividend. It's when you want to exit, when you want to pull your money out, how are you going to do it? Another major problem with commercial real estate is you're not going to get a home loan to invest in commercial real estate, right? So if you have 1 crore with you today as your own money, right, then you have to invest the entire 1 crore to buy that asset. Whereas residential, you can buy a 1 crore asset by putting in 10 lakhs also and taking 90 lakhs as a loan. So these are few things which, Ramya, affect how you go about thinking about commercial real estate. Again, commercial real estate, if it gets unoccupied or if the tenant moves out, right? And if you own that entire shop or that thing, it is your headache to go and find the next tenant. And, because every month that you don't get a tenant, you're losing out returns on your investment. So, I think it's an interesting asset class, but you need to have that risk appetite to hold on to that asset. And of course, that much of capital to put in without a loan. I hope I answered your question. Akanksha has a question. Sarjapur Road seems to be going completely out of hand. Random builders are quoting sky high for locations that don't even have a proper road. Can't agree with you more, Akanksha. In fact, the phenomena is very interesting that when the market is on an uptrend, there are 3 kinds of people who show up in the market. One is the established builders, right, who are now in high demand. So they move into the greed zone. Right. So a property which should have been priced at, say, 12,000 rupees suddenly is priced at 15,000 for no logical reason, but because the builder has a brand name, because people are trying to buy in that particular location, and there is a sense of urgency in the market, right? The second kind of developer is someone who's not even a developer, right? Some random landowner or some person who said, okay, I can hire a contractor, I can hire an architect, and I can put a building here together, and let me do a joint venture with the landowner and convince him, right? His breakthrough would be doing that joint venture with the landowner. After that, he goes about building that project, sticking a brand or doing a sales mandate with some of the other companies like House Bay or Anarok or anyone else, and trying to sell his inventory, right? Now, in an up market, even that inventory sells. No one really dives deep into the pedigree of the builder, and you're basically subject to his learning curve in that particular project, right? So you might get a good deal, but do understand that the product is being made for the first time by that person. The other kind of person who comes up in this market is the fly-by-night operators, right? People who launch a project collect a lot of money, and then either they realize they're not capable of developing that project, or they have the intent only was to never develop it. It was just to do a JD, launch a project, collect some surplus, and either try and gamble with that money by acquiring more land in the peripherals, or just like disappear from the scene. I mean, there have been a lot of such stories in the past, but you got to be careful that you don't invest with a fly-by-night operator. The real place where you should consider investing is the third kind of developer, who's who understand there's an opportunity in the market now for him to build a brand for himself, for him to actually sell more volumes than what he's traditionally sold, right? But not be that greedy or that aggressive and take his price up by 25-30% premium to what it logically should have been. So these are the developments which you really need to look out for, where the price is not irrational, where the developer has certain pedigree, and the developer's focus is to sell out most of the project, and hence he's keeping the price reasonable, right? And that is a sweet spot for you to look out for as you go about buying a property now in the market. Yeah, so Dhrumil, would you like to ask your question?
Hey, yeah, hi Ashish.
Hi.
Good morning. So recently the state government had, said that all B khatas would be converted to A khatas.
Yeah.
Now, but there's a lot of confusion on the ground, so it's not happened practically.
Yeah.
Lot of apartments and villa sellers, especially in Whitefield, there are no new villas coming, so they are resale villas.
Correct.
So
Correct.
most of them are like B khatas only.
Yeah.
So what should a buyer do? Like they should buy a B khata, or what has happened with that B khata to A khata conversion, which the state announced? Yeah.
Yeah, unfortunately, there are a lot of such announcements and initiatives which are taken but not implemented on ground, or the implementation is slightly messed up, like the e-khata story, right? Where today registrations are stuck because they're not able to do the e-khatas because of systematic failures happening at the ground level, right? So B khata conversion to A khata is one of them, right? And this is not the first time, by the way, Dhrumil, that it's being announced. Earlier, there was a scheme called Akrama Sakrama, where they said we'll convert all these properties which don't have A khata to A khata by paying a penalty. This scheme is exactly the same, but in a new packaging. Now, should you or should you not buy a B khata property? Look, there is, again, given the fact that prices have gone to a certain level in the market, sometimes the only option left is to buy a B khata property, because it is still slightly more affordable than the A khata properties. So it is a function of your affordability and your risk-taking appetite, right? Now, risk is not in terms of whether the building will get demolished or will not be it won't be there in the future. It is about any penalties that you might have to pay when the A khata conversion is going to happen in the future. Right. So again, just be very careful about, even in B khata, there are different things. Sometimes developers have deviated 100% from the sanction plan, right? Instead of building 4 floors, they build 8 floors. So then you have to be careful whether you're buying the 8th floor or the 4th floor, because if mostly the top 4 floors will have the B khata for a long time. The bottom 4 floors might get a khata easier, right? So you have to watch out for these nuances, Dhrumil, as you go about navigating B khata properties.
Sure. Thanks, Ashish.
Sure. Great. So let me move to the next question by Himanshu. Most of projects in the city are 12,000 plus. Even in North, the prices are 10,000. If the average is 9,000, where are below 9,000 per square foot properties? How to correlate builder floor prices with big projects in same vicinity? Example, Bren Imperia and Shub Enclave, Harlow Road versus a good builder flow. Okay, so I'm assuming, Himanshu, you're from NCR because you're using the word builder floor. In Bangalore, we actually don't use that term at all. But what I understand from you is a standalone building, right? So where are the properties below 9,000 rupees per square foot? Great question. But honestly, it is there in all the bylanes of the markets. You go to Belattur, you go to Budigiri Cross and beyond, you go into roads off Sarjapur Road going deep inside, where there are B grade, C grade, D grade developers. You will find them selling properties below 9,000 rupees. right? But of course, even in those locations, if there's a A-grade developer, they might be at 10,000 rupees minimum, right? Kodati is a prime example of that, which is off Sarjapur Road. It is really deep inside. The roads are very narrow. The future of those roads widening doesn't look very promising. But if there's a A-grade developer there, he's not selling at less than 10,000 rupees today, right? In fact, a lot of them are 12 to 14,000 rupees also. But if you're really looking for 9,000 and below, then you'll have to look for probably C-grade, D-grade developers off the main roads. Yeah. And how do you correlate builder floor prices with big projects? So that is very straightforward, Himanshu. In Bangalore, people value a gated community largely. The first preference for anyone is to buy into a gated community with amenities and park spaces. If that is not affordable, then people go for these builder floor standalone things. It is not bought with the same pride that you would buy a builder floor unit in Delhi or a Gurgaon. It is more of a trade-off that people have made versus the supply budget and what is what they have found in the market. I hope I answered both your questions. Randhir, Sarjapur, Kaswanali from tier 2 builders quoting 12K net price. What is the average price for these areas from tier 2 and 3 builders? Is it worth to spend 12K for tier 2 given area proximity is closer to office? Is it worth to spend 12,000 rupees per square foot for a tier 2 developer in interior locations? I think you should look for options from grade A developers if you're going to spend 12K, and with larger communities, of course, because even when you want to resale it tomorrow, right, the new buyer is obviously going to appreciate a larger gated community which is established versus a smaller, C-grade developers property. So maybe if you're going to spend 12,000 rupees, just search a little more and find A grade or maximum B grade property to invest in. Is REIT a viable option for commercial real estate? Yeah, Dilip. So I have invested in REITs in the past. I saw very meager returns, but in the last 1 year, REITs have really taken off again. The prices have gone up, which only gives me a signal that maybe it's not the right time to enter because the prices have gone up already. So we missed that curve, right? In fact, I used to think that it's good because you get a dividend of 6%, 6.25%, but the capital appreciation has been much, much slower than the equity markets, right? So maybe not something which I would advise as of now, Dilip. And secondly, same problem, you cannot leverage, you cannot take a home loan, or you cannot get a low cost 7.5% loan to invest in a REIT. So, I might be wrong here, but I feel that it might not be the right time to enter into a REIT. And again, this is not financial advice. This is just my little real estate experience speaking. But you should speak to probably people in the equity markets to get a better understanding of whether to invest in a REIT or not. Great. So we've got a few more questions. I think Mr. Hem Desai, what are your views on the Marathalli Vartur belt in terms of ROI, considering the market is saturated, where Century, Sumadara are launching new projects? Yeah, we ran actually webinars specifically for Century and Sumadara's projects, where we spoke about, why these projects are interesting, even from an investor's perspective, is that you don't have too many land parcels opening up in that market anymore, right? It is saturated in terms of land supply. While demand is extremely high because you're getting demand both from the Whitefield, Brookfield side and from Outer Ring Road, Bengaluru side, right? So it's at that sweet spot between these two large office markets, and with no future supply coming in, these properties are definitely going to be a good option from an investment perspective. Mithun Raj, what's your view on Gunjur Panatur area? I see many new apartments coming up, Orchid Life, Neopolis, yes, okay. Also, I saw a new board from Purvankara coming just opposite to Trent Square, Equino Silver Oaks Road. Okay, so I'll just give you my view on the location, not specifically on these projects. Gunjur Panatur, chaos in terms of infra and accessibility. But sometimes in chaos is where, people find good deals, because once the chaos gets cleared, the prices go up. I don't know if you guys read the article recently where it spoke about that 45-meter road which connects Gunjur to Outer Ring Road near Embassy Tech Village. It recently got a clearance from, legal issue that they were facing with the forest department. And now, if that road gets developed, then it's a game changer for that entire Gunjur, Panatur, Vattur belt. So I would still say it is investment grade for sure. There are a few upsides which will come up, which will change the game for that market. Is there a way we can find out which category a builder falls in if someone is fairly new to the market? Akanksha, this is something which, at Propsoch, we have internally created a grade A, grade B, grade C, grade D list of builders, right? And people who typically work with us, we give them that input specifically for the developer. How we have gone about grading them is largely on their past performance, how many projects they've done, how long they've been in this game to understand the experience curve, what complaints are there about them by existing people who live in their complexes, and finally, what is their funding situation? Because there are ways to figure out if a developer is in distress, and then the chances of them completing a project is lower. So, amalgamation of all these various parameters helped us decide what is a A, B, C, D grade developer, right? So, you can feel free to connect with our team and kind of take this forward with them. Yeah, Vishnu, quick question I have been hearing regarding grade A developers, grade B builders, etc. Is there certain criteria? So this is the exact same thing I just spoke about, Vishnu. Hope I answered your question. Debashish, you can go ahead and ask your question.
Hey, thanks, Ashish. Thanks for your great insight on data back. So, just curious, where are you getting this data? Is it like something paid? Because in Bangalore, getting the real data is very tough, right? So, what is the source of this data?
Yeah. So I used to work at Anarok before. Anarok is one of the top real estate consulting companies with a special focus on residential, right? So I kind of know their internal process, how they source the data and stuff. So very reliable information. Anarok's reports are generally published in the open this thing. So you can actually Google it and find an Anarok report and pull out this information. If Googling is out of fashion, you can chat GPT it and you'll get a lot of this data right there, with source links to the original reports, right? Other than that, for the commercial real estate, we have leveraged Knight Frank and CBRE's reports on the commercial real estate leasing.
Okay.
Yeah.
So,
I
let's
hope,
say I wanted to pull up some data. Yeah, I have a couple of follow-up questions if it's okay.
Yeah. Please go ahead. Please go ahead.
Okay. So let's say if
Go
I
ahead.
individually wanted, because as you rightly said, this data comprises of the land, apartment, villas across market, right? And as we know that
Yeah.
every micro market is very different and the focus is very different. Is there a way to narrow down to particular location and get that data pulled out?
That is a little difficult. Honestly, you will get reports about what's happening in North Bangalore and maybe a Hebbal or a Yelahanka. But if you say, I want a report on Jakkur, I want a report specifically on Tanisandra Road, it might be difficult for you to get that specific information.
Okay, because I was thinking if that data we have, we can go and discuss and negotiate, right? Otherwise, it's very hard to come up with that, as you said, 9,000 number and then go and talk to a builder who is quoting 15,000. Right? It's unrealistic to go and negotiate on the table.
Yeah.
Okay,
Yeah.
understood.
Yeah.
Okay, that's part one. Second
But
part,
the
and
question,
as RERA has mandated. Mhm.
yeah, no, you finish your question. I wanted to show you guys a tool that we have created internally. But
Yeah,
you
please
can
go
go
ahead
ahead and
because
ask your
this
question.
second question is not related to this. Yeah.
Oh, okay. Okay, got it. So let me just present something else. Yeah. So we recently launched something called the Fair Price Calculator, right? And we have kept it open and free for now for you to use on our website. So you can just go to propsoch.com, go to resources and access this.